All right, good morning, everyone. I'm going to try to do this again. I think we've figured out our issues. Let's keep our fingers crossed here. Socket, Jules. All right. Dow Jones and S&P, obviously, a massive night last night on the back of the Fed coming out and actually beginning their tapering. So we got a somewhat of a surprise out of that. Really important, though, they even extended the timeline that they're going to keep rates low. I think, really bullish. And I think, the market had already, for the most part, priced in tapering coming either, this month or next month. So, it didn't really come as a surprise. I think it was a bit of a relief rally to just have it out the way. Markets really traded higher. What's interesting is you didn't have a whole lot of reaction to the actual tapering fundamentally. The dollar did strengthen a little bit, but not a whole lot. Interest rates, locally and, in a lot of the other emerging markets didn't really do anything. I mean, you're looking at, South African 10 years are basically flat on the day today. Even the U.S. 10-year did very little. So, I think for the most part, the markets had this priced in. Commodities haven't really done a whole lot. So, we're going to see, if we start to get a bit of a relief rally in some of the stocks that have been adversely affected by that. I think that could definitely start to happen starting today. We had Asian markets, which were a bit mixed, which is interesting considering how strong the U.S. was. I mean, the Nikkei was very strong, up over 1.5%. Australia was up over 2%. But we had Shanghai that was down. Hang Seng that is actually basically finishing flat on the day, and the Kospi was also a bit of a laggard. So kind of interesting how we've seen this divergence happen. I mean, China always seems to divert, but the rest of the market's a bit of a surprise. We have very little on the corporate action front, and then market data out today. We had all industry activity index in Japan that was a little bit better than expected. We've got retail sales in the UK later. We've got the Fed's Fisher speaking at 3:30. I think that'll make no difference whatsoever after yesterday. Obviously, the big one is initial jobless claims out at 3:30. Continuing claims, Bloomberg Consumer Comfort Index. We've got Philly Fed Business Outlook. We've got existing home sales and a leading index. So we actually have quite a lot of market data out today. I don't think that that's going to be as influential as it normally might be, simply because we just had the Fed last night. There's not going to be any change to the outlook probably just based on today's numbers when they just had such a big change in policy and big statement yesterday. So I think today's data will be very small in the context of things, and I think what we're going to be focusing on is really close out today now and just the market action going into the close of the year. I think right now there's a very good likelihood that we are set up to rally into the year end. Obviously we've seen S&P is the first chart I'll show here. We closed at all-time highs as of yesterday. You remember we flirted with this sort of 1808 level about probably 5 or 6 closes in there. We narrowly closed above it yesterday by about 2 points. If I zoom forward a little bit here, we can see a little bit more clearly that our level is going from about 1775, which is really well defined. That's where we broke out from here back in early November. We've come down and we tested it over the last maybe 3 or 4 sessions, and then yesterday we ripped up higher. So breaking out of this little pattern that runs from, call it 1773 to 1808, we're looking for about another 35 points of upside, which would take us up to around close to 1845, probably technically on the target. So keep that in mind. I think the S&P's definitely got some legs on it over the next little while. Could definitely get there by early Jan. All right, let's have a look at the U.S. dollar yen. I'm looking at a 1-year chart here, but what I really wanted to show is let's just look at the lateral resistance in terms of all-time closing highs, or not all-time closing highs, closing highs for the last few years. You can see here we made a nice breakout above 103.30 as of yesterday's session. It's basically double quoting the yesterday's action and today's action here. I don't know why it's doing that anyway, but bottom line is we've broken out here. Technically we've got a huge target. I really think that when the real breakout happened, it occurred back around here. Which still gives us a big target to the upside from here. We'll be looking, in my mind, up around 107, 108 in the short term to test on the U.S. dollar yen. We did get up to about 104.25, and I think this is such a positive thing. To me, you can start to watch this yen again and its correlation versus the other currencies for a leader in markets, and kind of risk on sentiment. To me, that this was one of the best indicators I watched for 3 or 4 years back before kind of 2009, I think it's back finally, and I think we need to keep a close eye on that on a daily basis. Right, Anglos. I wanted to show Anglos here. Actually, I'm going to get a little bit more complicated with this one. Still looking at the year chart here. We're going to have a look at the fibs drew it the wrong way. Sorry about that. We'll have a look at the fibs here. We have this move off of the lows down around $185. We traded all the way up to 260. Remember, that was only the beginning of November. So in a month and a half, we moved from 260 down to 215. We really bottomed out exactly at 61% retracement numbers, which are down around 212. And I think today, if you look at what we've just been in this firm downtrend here over the past month and a half, and today I think we're going to definitely break out of that without question, and I think we kind of pop up above this level, or around the 218, 220 level. It's going to take us to 230 almost in a straight shot. In my mind, that's up exactly at the 200-day moving average, and I think we can tack on more than that. I think this breakout here will be significant because we will get this breakout today, and it'll probably take us to 230 in a straight line. I think there's more left on the table in Anglos there. All right, let's have a look at Mondi. Mondi has had we had some earnings there 2 days ago, I believe, our trading statement, and then we had B of A Merrill that came out and upgraded it yesterday. A nice little breakout here out of a flag. It's only just broken out, so I still think there's a lot of meat left on this bone potentially. We only had $160 here. We were 180, same sort of thing, beginning of November. I think this thing definitely could tack on some advances over the next couple of sessions. It's kind of been one of the ones I buy on every pullback, so just keep an eye on that if you're looking to add some exposure. Netcare, very similar sort of setup, just out of what in the heck. We've basically broke above same thing, little flag pattern. Just popped our head above that, only narrowly, in yesterday's close, and I think that we will be looking to make a nice little move, probably up to test recent highs, and maybe on up to around 26 in Netcare if the market allows for it. Let's have a look. The last one I'm going to show here is Discovery. Discovery, I'm going to back out and show a 2-year chart here, and it's looking a hell of a head and shoulder-ish, and I'm just going to show how we've been really testing support on the neckline over the past few sessions. We need to hold this level badly in order for us to really make to not break down to the downside of this pattern. I would be looking for any sort of break above that level, which is, call it 81, to sort of negate the head and shoulder pattern. So that's the risk range I'd be looking for at the moment. We're going to look for a breakdown probably below, I would say, the lows of the last month, which are around 77. Could be sold if it gets below 77 for a head and shoulder. I think if we get above 81, then it'll probably negate that pattern. So just keep that one in mind. You're looking for something to sell. It drops below 77, might not be a bad idea. And that's it for today, guys. Thanks a lot.